So becoming a consistent trader isn't just about making consistent gains, it's actually recognizing when there's an opportunity for the market to be very chop and for the market to be very straightforward. So in today's lesson, we're going to be giving you guys an example, the STX approach to dealing with choppy markets. We believe that in order for you to be successful, you have to stay 10 steps ahead of the market by planning everything in advance. Let's get straight into the details here and discuss how it works. So the first report that we always provide in our room is our war room report. Now this report is essential because it gives us the gamma ranges for the daily perspective. Now having these gamma ranges gives us an idea of when the market's bullish and when the market's bearish. As a member in the STX community, you get access to these reports daily, every trading day, so that way it can help you prepare for the future success. Now, we explain the current market situation and we talk about the probabilities in the gamma zone. So we mentioned that there is a slight chance SPX can start to look bullish today, but the probabilities of us seeing beyond 5,400 are low, and the range that we said that is in the bullish area is between 5350 and 5380. Now keep in mind, this is just a range, just so we know going into the trading day what we are going to expect on SPX. And besides that, we also give a range on the downside here as well. If SPX fails to hold 5340, it's possible that we can test 5300, which is the strongest support. That's estimated low is 5280, but there's a slight chance there. Okay, so we confirm that the market is bullish if we hold and defend 5360, and bearish if here. I also mentioned that market is likely to chop in the morning here, okay, because it's OPEX. So when you have this information, you also get probability ranges as well that we communicate into the trading day. Now in our pre-market notes, we give a bunch of information on key trade ideas that we're looking at. Okay, we spoke about that wait for NVDA to hit 109, and that also confirms strength as well. We got a trade idea that we're looking at, the 112 call that we're looking at. These are our levels. None of our levels pretty much hit today because the market was in chop. So when we prepare for the market here, in our weekly analysis, I give all the chop ranges to my team here. Okay, so for example, NVIDIA's chop range was between 104 and 110 here. We did have a very successful trade on NVIDIA right in the morning here when we decided to take the calls right when the market was looking very weak. So we call that a great NVIDIA trade at 2.19, and this NVIDIA trade 110 call managed to give us solid profits here, and we basically sold around 50-60% here. We did take a SPX play as a potential hedge, but that went to zero because that was pretty much our hedge for the trading day. But you know, we were looking into getting ARM, but we changed our our game plan, because as we were looking into ARM here, as per our weekly analysis, ARM was pretty much looking pretty weak around these ranges here as it rejected my inflection point. Now other stocks like NVIDIA, which was trading in my chop range, it was very hard for this to hold up since it rejected that 109 area as well. Other stocks that are pretty much was trading in my chop range, as you guys can see, is my SPX analysis. So my SPX, we have labeled the 5300, 5400 area as our chop range, and that was given in our market sentiment report right here before the market opened, and that was given on yesterday at 8:40 a.m. We also give our SPY chart as well, and you can see here SPX is going to be trading in chop once it's in range here. So by studying the gamma levels, we're able to determine all this information. Even QQQ was trading in our chop range as well. We gave one great trade on the QQQ for small accounts. Basically, we gave the 446 at point. It was at 0.3, and we said jump in at 0.2, 0.15, because we knew it was chop. When the market is chop, you never want to buy at the current prices. Once people got the fill, it went to around 56 cents, and that was where our target was with that. Okay, so it's always important that if you expect the stock market to be in your chop range, that you be very careful for it. Okay, our next was Apple. Now we took Apple puts here, 215. The reason for this trade here was because Apple did not have any sort of chop range here, and it rejected right at my level 1 bullish resistance point right to the T. And this was another solid 60% play that many members had taken. Okay, so we offered that great opportunity for all the members to take on that amazing trade here, and we decided to swing our Tesla calls only because it held my level 1 bearish support over there, and we have the Elon Musk situation with the Donald Trump interview. So we are hoping that after it holds the level 1 bearish support, it can possibly go to 204, and you can see the number is to the T. Apple also number is very accurate by this being the top here. If we go on our analyst channel here, you can pretty much see that Apple numbers were pretty much perfected. Okay, so this is only available for my mentorship room, where we give the predictions and all the analysis on all our details. So you can see here 219, yesterday 652, and you can see that Apple was given there. Now, one thing you want to remember here as well is that each level that I provide has a meaning to it. So level 1 is usually my gatekeeping level, and that is explained in this STX model definitions here. Okay, so level 1 is always a gatekeeping level, and usually if it hits that peak point, it rejects because it's a level that holds the market the market or stock down. Level 2 confirms the trend. So in order for the upside trend to be guaranteed by Apple, it has to break through 220. It didn't. So we found this as a perfect shorting opportunity to get in. We look at the premiums as well, because all these levels are designed out of premiums, as you guys can see. So there was no chop range on Apple. That's why I liked it. We didn't force a trade on Crowd because you can see it's trading in the chop range. You want to avoid that. We didn't force a trade on Meta because it was trading in my chop range, as you guys can see that. So we avoided those trades that are in my chop range. You can see Coin was also in my chop range here as well. So we avoided that because you want to make sure premiums are at the best point. You can see my Amazon is also in the chop range. So in these ranges, based on premiums and the information that we are provided, that's how we know exactly when the market's going to be chopped or not. We analyze the market in our weekly review, which we do over here, and all the information is timestamped and members all know about it. So having this information is crucial, because when we set this up, I can see here, hey, if I'm looking at Amazon, for example, here is trading within this chop range, how do I position my trade? I become more patient on a trade when it's trading in my chop range, because I have discovered that area to be a chop range. Now your question might be, hey, how do I figure this out? So I have a proprietary model that allows me to analyze the ranges. So for example, if Amazon is trading between 160 to 170, I know that the call premiums are going to be very shaky, and it's going to be very volatile. So in these ranges, you can definitely take trades if you want to, but it has to be a quick play, okay? Because every time it goes up, it's going to go back down. So you want to make sure you're aware of that moving forward. And this detail allows traders to understand when it's time to push the gas or to pull the brakes. So it's very important to be aware of these situations. As you guys can see, when I gave that QQQ trade, I said that it's at 0.3, but wait for the opportunity for it to go lower, okay? And that's how money was made, because we waited for that to go to 0.2, 0.15 range when it was at 0.3, and then when it hit the range here, that's when it started to run, and it ran to 50 cents, which was my target for my team. Okay, so that's very crucial to remember here. Staying 10 steps ahead of the market is how you become successful at trading. You can do that by joining my StockX mentorship program, where I provide my predictions at the beginning of the week. And this has helped a lot of my traders find a precise entry points and exit points. We got in NVDA at a perfect opportunity right in the morning. And you guys can see that as well in my Twitter, where I pretty much spoke about that NVIDIA right in the morning. Looks like 110 and 112 calls can work right at the open. Okay, that was at 9:32. And the reason for that is because we've seen a premium spike on that, even though it was in the chop range. But because it was in the chop range, I decided to sell my calls right near the open. When I had profits of 60%, I took it immediately because I knew it was going to chop throughout the entire day. So it's important to always remember that when you are trading in a chop range, sell them fast, take the profits fast, and then move on to the next play. When it starts to break out into a new range, that's when you start to basically trade a new position, right? So for example, Dell over here, if we go back to our chart, I was considering getting Dell, but as you guys can see, that Dell, once it broke through 96, was in my bullish breakout zone, had a nice spike all the way up to $97. So it was definitely a fast theory for a spike. It started to fill later throughout the day. You can also see that LRCX was in my chop range throughout the entire day. So these levels are very, very accurate, okay? And you can see kind of ASML not moving much there either, but you can see the accuracy in the ranges that we provide. And these are developed through my proprietary trading model, where I analyze how option premiums react in specific ranges. If you guys want access to these ranges, to this information, to my trades, to my mentorship program, where I teach you how to use my model, and we also figure out solutions on how you can be profitable through my coaching, then definitely check the details in the bio. Give us a thumbs up and a like, and subscribe if you're not, to stay up to date with the market here. Now, I want to end off by talking about what's happening in the market moving forward. So we have the PPI report coming tomorrow, which is before they open, and we have the CPI report as well. But more importantly, we have the Elon Spaces event that is happening at 8 p.m. Eastern time. And through this event, Tesla might have an opportunity to move here. Now, the premiums, when I was looking at it, showed me that there was momentum moving up in the calls, but that doesn't really guarantee anything here. So I am bullish on Tesla, depending on what happens there. You might get some commentary from Donald Trump giving incentives for EVs or possibly FSD. So we'll be looking into that shortly. So thanks for tuning in. I'll see you guys in the next one. And like always, let's get that money.